Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Podcast, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at some stocks on the move today. I'm Tim Stenevec, and we're joined by a Bloomberg News cross-asset reporter, Emily Grafeo. She's out in San Francisco, and she has been watching everything happening in today's session and also the after hours. Emily, what is on your radar?
Okay, so I'm looking at shares of Lyft right now because in the post-market, they're up almost 8%. They reported better than expected gross bookings in the first quarter of $4.16 billion. And also riders increased 16% from a year earlier. The reason why I'm flagging this one is because this is a really sharp contrast to the results that we saw from Uber. Uber just the other day posted slower than expected gross bookings, and they had cited a decline in U.S. inbound travel. So less tourists coming into the U.S., less people taking Ubers. I guess now more people taking Lyft. Now, Tim, you probably knew this, but I actually didn't realize how much smaller in size Lyft is. Their market cap is about $5 billion. Compared to Uber's, which is $172 billion. So
Wow.
They're often referred to as competitors, but Lyft is a small cap stock, essentially.
Yeah, I mean, look, I think if you think globally, Uber has a much bigger global footprint, even though over the last few years under Dara Khosrowshahi, it has shed some of those international businesses. Lyft is still so focused on the U.S., but I think in the U.S. market, which is a huge market, make no mistake, these two things are essentially commodities. I mean, are you an Uber person or are you a Lyft person? What are you?
So I'm a person that every time I need a ride, I just open both of the apps.
There we go.
And whichever one is cheaper, I just pick it. I'm not really brand loyal to these companies. I mean, I have both apps on my phone. It's interesting also when you look at the stock performances because Lyft was essentially flat year to date. It was actually outperforming the small cap index, which is down year to date, the Russell. And then Uber is up 36% year to date. So, I mean, these are, they're competitors, but at least for this year, like Uber's doing better more broadly. But right now, for earnings, Lyft is ahead.
You illustrated my point perfectly about these things being commodities when you said you opened both of them to see which one is cheaper. Hey, real quick, when you come back to New York, you land at the airport. The local secret is to get a yellow cab because there's not a line there and you don't have to drive or walk very far to get an Uber or Lyft. That's just what I do. I don't know what you do.
That's true. No, I do like the convenience of just being able to get out of the airport and then get in a vehicle. And then, I don't know, I just hate the act of waiting for the car to pull up and not knowing where it is. And, I'm a little impatient.
Yeah, these are the problems of the travelers, I guess.
Yes.
Okay, well, AppLovin, another company that is that you're looking at today. What's going on with AppLovin?
Yes, so in the regular trading session, it rose 12%. They had pretty good earnings. The company reported EPS and sales above estimates. This is an AI-powered advertising tech platform. EPS beat, revenue of $1.48 billion also beat. And this was really interesting from the street. There were a lot of positive comments from Wall Street. Sometimes after earnings, people have really strong opinions about companies. William Blair said, "We have covered technology stocks for nearly 25 years and have never covered a company with this margin profile."
Wow.
So keep an eye on the margins here from AppLovin. Again, this is an AI play. They also agreed to sell their mobile gaming business to Tripledot Studios in a deal worth $400 million. So the momentum today in the stock seemed to be both related to that deal news and then also the better than expected earnings and margin excitement, Tim.
Can I just remind everybody that this stock rose 700% in 2024 and in 2023 was up 278%?
Yeah, that's wild.
It's wild. Okay, Coinbase, crypto.
Okay.
What's going on?
Yes. So today in the regular trading session, Coinbase was moving higher. But today it reported earnings. So now in the post-market trade, it's down about 3% currently. Their first quarter total revenue and then their second quarter forecast for subscription and services revenue missed estimates. We know this earnings season, it's kind of all about what are these companies expecting going forward as tariffs and the trade war continue to roil their way through markets and the economy. They see subscription and services revenue $600 million to $680 million versus estimates of $707.8 million. This is a cryptocurrency exchange, but just like a lot of companies, this is not the market where investors are rewarding stocks that miss on the guidance. That's been really important this earnings season. The company also got a boost today in the regular trading session because Bitcoin had such a great trade today. It topped 100,000 for the first time in several weeks, and often we see when Bitcoin does well, the crypto-linked stocks like exchanges do well.
The Stock Movers Podcast from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.